And the key thing to remember about Bitcoin is when this whole situation started with COVID, it went down when with the Nasdaq, went up with all the liquidity. It's gone back down. Now it's gone back up with the stock market. So for it to show divergent strength away from the stock market, I think it has to probably get through this recession, which we all know is coming. If you certainly look at the yield curve, it's a matter of time. And to see if it can show divergent strength with the stock market going down. As the Fed has pointed out, they are not going to be there to cut rates, which probably is bearish for equity markets. Or does Bitcoin outperform on the way up? I look at it as it's got to prove itself. And at 30,000, about 3,100 this weekend, at 31,000 this weekend, I think it's just a little bit too risky here, particularly if we tilt over to that recession that brings most assets, risk assets, lower.
Bitcoin prices hover above $30,000 as the cryptocurrency is facing headwinds tied to the potential recession. Mike McGlone, Bloomberg Intelligence senior macro strategist, highlights the outlook for Bitcoin, while also commenting on how geopolitical pressures are hitting oil prices. In a recent tweet, Mike points out that Bitcoin's main adversary is the U.S. recession, as this is the first U.S. recession Bitcoin would be witnessing. According to McGlone, people are hoping for, even if we go for recession, the Fed will ease and save these risk assets. The key point is Bitcoin is still very much trading like a risk asset, like the stock market. Now you look at things like gold and treasury bonds, they might be better off. So it's got to prove it. And the best way to prove it is to get through this recession and prove it. McGlone says Bitcoin has to outperform gold and stocks to prove itself as the fastest horse in the race or risk becoming just a shadow for the stock market. In this video, McGlone presents his case for Bitcoin divergent strength, his outlook on crude oil prices, and he also shares his view on the crypto regulation and how they affect the climate for crypto. As you dive into the video, remember to give us a like, subscribe, and drop your comments as you go.
Well, I'm much more worried that of the whole tide going out because of this recession and the risk that everybody's priced in for the bullish scenario. The Fed's going to ease, the Fed's going to save us, yet Jerome Powell said he's not going to. You look at the interest rate expectations, there's still priced for higher rates, and we're getting liquidity pools, meaning higher rates in England and Canada and most of the rest of the world. That's just not a good environment for an expanding global economy that's maybe tilting over to recession. People are hoping for, even if we go for recession, the Fed will ease and save these risk assets. The key point is Bitcoin is still very much trading like a risk asset, like the stock market. Now you look at things like gold and treasury bonds, they might be better off. So it's got to prove it. And the best way to prove it is to get through this recession and prove it. Otherwise, it's just a faster version of the stock market, which I think most people are looking for, this faster horse in the race to transition to trade more like maybe gold and long bonds. And basically, you have to be bullish the stock market here and expect Bitcoin to outperform. Otherwise, to me, the key risk is the tide goes out and Bitcoin's the fastest horse in the race, and it kind of leads the way. This is a revolutionary technology, and oftentimes that's what humans do when something comes in that they don't understand, which is okay. The key thing about the crackdown, I think, is prudent, is we have to purge some of the massive speculation in this space. All revolutionary technologies have massive speculation. I was reading this weekend about RCA, the radio company, went from 3 to 300 and then back down. These things happen. But there's 25,000 cryptos in each purge. And then there's Bitcoin, Ethereum, and crypto dollars. That's very significant revolution technology. The key thing is Bitcoin's going so far, so fast, and it still just has it's got to prove it's not just going to go up more than the stock market. And that's the key thing. Now, most of our viewers and listeners have not lived through a true stock bear market where it drops 20%, the Fed doesn't save you, and then it drops another 20%. To me, that's the risk in the broad market. Crude oil commodities are a bear market. They're down. They were down almost 30% for a little while from the peak, down 20% now on a year-over-year basis. And the key question you have to ask yourself is what's going to stop this and save it? Typically, it takes a long and variable lag. The Federal Reserve easing. What are they doing? They're still tightening. Now, you see what's happening in China. China's leader made a major mistake of his unlimited friendship with Mr. Putin. And what's that doing? Overall, to me, it's tilting the whole world towards recession. China's having a problem with all the data is disappointing. That's the body in motion. You have to ask yourself what stops it. So I see crude oil is more likely to head towards 50, maybe even 40, priced on what's already happened. Natural gas has already done that. Natural gas went from 10 to 2, and now it's bouncing. I see the whole commodity market in a bear market, and the question is, I don't see anything stopping it. So I think the best commodity might be continue to perform well in the next year or so is probably gold as we tilt towards recession, and maybe we eventually get a Federal Reserve pivot or ease. But for a commodity bottom in the commodity market, typically we are way too early. Typically, you need to see a lag to easing, and we haven't even started that yet. And the Federal Reserve and most central banks still tightening leads to the recession being over. Right now, we're seeing a bounce. But I did make the call for $50 a barrel a long time ago when it was much higher and it was on the way up. But that is the trajectory. The key thing is that's what it always does is commodities always go towards near their cost of production in the long term, in particular when economics get a little dicey. And that's happening right now. $50 is the average cost of production in the U.S. In natural gas, the average cost of production is around $2. That's where the market's bottom. So right now, the key question I'd like to ask you and our viewers and anybody else is what stops this bear market in crude oil? OPEC's trying to help by cutting supply, but typically what happens when OPEC cuts supply, that happens in bear markets. They're responding to what they see in the macro in a prudent way for a cartel that's trying to boost prices.
Critics of the digital assets industry say it's a buzzword laden and unsustainable, always chasing the next new trend without much thought to its sustainability. And for the most part, they are right. Over the weekend, 8BTC, one of China's first crypto publications, announced it was abandoning the field entirely and pivoting to primarily covering AI and the metaverse. Venture capitalists, seemingly bored of blockchain and crypto, have found a new interest in AI. PitchBook data shows that venture capital funding for crypto is down 80% in the first quarter of 2023, from $12.3 billion to $2.4 billion. PitchBook's data also shows that AI startups raised $1.6 billion this quarter, and another $10 billion in deals have been announced but have yet to close. For all the hype the AI bulls have for the technology after putting it through its paces, AI is still somewhere between the peak of inflated expectations and the trough of disillusionment on a hype cycle. It's slow, expensive, and 15 to 20% of what comes out of ChatGPT artificial mouth is a hallucination. Certainly, there are some similarities between the hype cycles of AI and enterprise blockchain. Enterprise blockchain was supposed to unlock billions in value through efficiencies, but those that tried to implement it weren't all that impressed, so much so that IBM dismantled most of its blockchain team because of low revenue, and Microsoft phased out its Azure-based blockchain cloud services. Even at the height of blockchain mania, the prelude to the COVID bull market, there wasn't the same fervor as there is with AI. One would think that given the disappointment of the enterprise blockchain bubble bursting, stakeholders would have learned their lesson about enthusiastically embracing new technology. But here we are. In other news, Bitcoin and the tech-heavy NASDAQ 100 hit their lowest correlation in 3 years, indicating a possible decoupling is in the works, according to a new report from Keiko Research. Simultaneously, cryptocurrency and gold hit the highest correlation in several years last week, with both assets rallying in 2023. Keiko, a financial markets data provider, reported that the correlation between Bitcoin and the NASDAQ 100 collapsed to just 3%. The NASDAQ tracks the performance of the largest and most actively traded non-financial companies listed on the NASDAQ stock exchange. Meanwhile, the index of correlation with traditional risk assets has steadily weakened this year from an average of 60% in 2022. According to analysts, however, the NASDAQ 100 has technically entered a bull market, up more than 20% since its December 2022 lows. Researchers at the data information company observed on Monday that the gap in volatility between crypto and tech stocks had reached its highest level since the FTX collapse. Meanwhile, according to another Keiko report, Bitcoin and gold have behaved similarly, with their correlation surging past 50%. Although the precious metal has seen a red month, is up year to date, touching its $2,000 all-time high in May, according to Yahoo Finance. Meanwhile, the cryptocurrency has been enjoying a BlackRock rally, surpassing $31,000 last week. Do you think Bitcoin will become the fastest horse in this race? Let us know your opinions in the comments section below. Don't forget to give us a like, subscribe, and turn on notifications. Thanks for watching.